All right, so today is Thursday, and as we are wrapping up this tax season, I wanted to go over some tax stuff with you guys. So, how are you guys doing today? We'll get started here in just a second. All right, so as many of you guys may or may not be aware of, tax season wraps up April 15th. So that is the deadline to file your taxes, but it's not the last day you can file it. So what do I mean by that? The IRS expects you to have your return filed by April 15th. And if you can't do it, they expect you to have an extension filed. They want you to file an extension for an extra 6 months of filing your return. Keep in mind, when you do that, that doesn't mean they're extending the amount that's due. You still owe whatever that balance is to the IRS. And they still want a payment on the 15th. And if you can't make a payment, they're expecting you to make a payment arrangement. So keep that in mind when you are filing an extension. Once again, tax day is April 15th, okay? All right. So let's talk about some of the common mistakes that you can make. Filing too late, especially not filing an extension. By doing that, you're giving yourself a penalty and interest. When you are reporting your income on your tax return, you want to make sure you are reporting it accurately. Always keep in mind that the IRS knows how much you made that year and from who and where it came from, because these companies have to report it to the IRS. So they already know. They just want you to tell them. And then they're going to match it up with what they're being told. So they're matching up with what you give them on your they are matching up what you give them on your 1040 form to what was reported from the vendor. And those numbers have to match. If it does not match, they're going to come after you for underreporting your income. Point blank. It's really as simple as that. One of the most common mistakes that people see or notice after they file is that they didn't claim a deduction or they didn't claim a credit, and they could have. Earned income tax credit is one of the highly missed credits because a lot of people think that they can't qualify for it due to the fact that they don't have kids. But that's not always the case. Let's see. So that's some of the tax mistakes that you may see people complain about or speak about. Another one is not choosing direct deposit. I don't know why people don't have bank accounts nowadays. I would think a lot of people or majority of people have bank accounts, but apparently that's not the case. Or they owe fees to the bank and they don't want to pay them. So they will request a check to be sent out for their refund. That takes 3 times longer to receive a paper check. And don't let it get lost in the mail. It's already impossible to get a hold of somebody at the IRS. So if it gets lost or if you have an issue with the check, it's going to take longer. And a lot of people don't realize that. All right, so let's talk about W-4. What is a W-4? The W-4 is the form that is provided to you from your employer. It basically telling your employer, this is how much I need taken out for my check for taxes. You are liable to fill out the W-4. All the information on there comes from you. So if you are not filling that form out correctly, you could have too little amount of taxes taken out, which means you are going to have to owe at the end of the year more than likely. And who wants to pay the IRS at the end of the year? Nobody. So it's always important that you go back, double check that W-4 form maybe twice a year. If you have a big life change, like you just had a child, you got married, you got divorced, you got another job, those items are causes that you need to update that W-4 form. Without that form being updated, your job has no idea how much you need taken out for your taxes. Everybody's scenario is different. Everybody's tax situation is different. Some may need to take out additional money on their W-4. You might need to take out an extra $10, $15 out your taxes to cover you so that you don't owe at the end of the year. Some people just want them to take the money out of their refund or out of their checks so that they get a bigger refund at the end of the year. So everybody's situation is different. But as important as that W-4 form is, I think a lot of people overlook it and forget about it. They only fill that form out when they first get hired. And they never think to go and update it, to make any changes for it. And don't let them claim exemption. If they're claiming exemption or exempt on that W-4 form, no taxes are being taken out of it. And guess what? You forgot. You went all year claiming exempt, enjoying that full, nice, big check that you get, right? And then mad when we tell you that you owe taxes at the end of the year because you claimed exempt. I can't work a miracle. I am not a miracle worker. I can't give you a refund if you didn't pay anything into your taxes and you owe. It's literally impossible. And you didn't have anything else going on. You didn't have a business. You didn't do DoorDash. You didn't do Uber. You don't have any deductions. None of that. It's only so much I can do. So I just wanted to touch base on that W-4 real quick. If you guys have any questions, feel free to reach out to me. And be sure to like and subscribe. Talk to you guys later.